And for more on the economic impacts of the ongoing trade dispute on global markets, we are joined by Peter Schiff, CEO of Euro Pacific Capital. Peter, with all these, it's just staggering. We have to sort of take stock for a moment of all the things that have happened from Friday to Monday. Doom and gloom then with these new tariffs on from the U.S. on China. President Trump going to Twitter, as we've come to expect now. And now today, President Trump also following the script, pulling back, trying to dial back the tensions. It's hard to get at what the real ground truth is here. What is your takeaway from all of this back and forth?
Well, you know, I think Trump has been dangling the prospects of this great trade deal in front of the markets, and he intends to dangle it in front of voters, I think, in November 2020. But I don't think there's any substance. I think if you actually look at what's going on, the trade war is heating up. Both sides are ratcheting up their tariffs. So to me, Trump is simply trying to do damage control. He's trying to talk up or maybe tweet up the markets. I don't know how much longer the markets are going to buy this. I mean, for now, they continue to trade on every tweet, but at some point they have to realize that no progress is being made.
Mm-hmm. And in the longer term, it looks like if these tariffs that were going to be 25% are really going to be up to 30%, how it already looked like this would probably last through the election. How long could this fight last?
Well, I mean, it could last through the election, I suppose, until we have another president. But, you know, I don't think there's any way that we're going to win the fight, and I don't believe that China is paying the tariffs like the president says. I think American consumers pay the tariffs when they buy Chinese goods that are subject to the tariff. Now, the Chinese yuan has, in fact, lost value since the trade war began, but the question is, will it continue to lose value, or will it actually reverse? I think eventually you're going to see the yuan moving higher against the dollar, because I think the U.S. economy, if you take away all the trade noise, the U.S. economy is already weakening and is headed into a recession and would be going into recession even if there was no trade war. So I think the Fed is going back to zero. I think they're going back to quantitative easing. And all of this is negative for the U.S. dollar.
Mm-hmm. I guess to get at sort of the interest here, who has time on their side here? President Trump has made bluffing, you know, an art form, but he is talking tough now as if he feels like the U.S. has the upper hand as time goes on in this fight. Is that really the case here?
Well, I've never thought that was the case. You know, I think that China, if you look at the trade relationship between the two countries, America has been benefiting at China's expense because we get valuable consumer goods that we can't produce ourselves. They make our lives better, and we get money. The Chinese loan us money to finance our huge deficits, so that means we don't have to buy the treasuries ourselves, so that money is available for other purposes. But all the Chinese get in exchange for the valuable products that they supply us with is dollars that we create out of thin air. And then they use them to buy low-yielding U.S. treasuries or other dollar-denominated debt. So I think that the relationship is actually hurting and undermining the Chinese economy, and it's been doing that for years. And I think the sooner they can wean themselves off of that relationship, the better.
Right, and then turning from China to Japan, President Trump has also gotten a lot of mileage out of moving from one subject to another. He obviously wanted to change the topic to this trade deal he says he has with Prime Minister Abe of Japan. Mr. Abe then tapped the brakes and said, you know, we're close to a deal, but there may be some specifics to work out. Let's say they have a deal. How much does that change the power dynamic with China and offset the losses from the ongoing fight there?
Well, I don't know. I'd have to see the deal. I mean, I like free trade. The problem is most of these trade deals don't give you free trade. They're all loaded up with all sorts of gimmicks. And so I doubt it. I think, look, the United States is running record trade deficits, record budget deficits. We have real problems that underlie our economy, and none of these trade deals are going to fix it. We have to get to the root cause of these problems, which is excess government spending, excess regulation, and artificially low interest rates. We need higher interest rates to encourage the savings to have the capital investment that we need to produce stuff ourselves instead of importing it from other countries.
Always bringing it down to fundamentals. Peter Schiff of Euro Pacific Capital. Thanks so much for your insight.